Hello, everybody, and thank you for joining today's webinar entitled Financial Wellbeing for Everyone. I'm joined by James Malia, who I am hoping you can hear, but I know we can't see him at the moment. So we'll try by saying hello to James. Good morning, James.
Morning, Carl.
Yes, so we can hear him, which is great. And you can see a picture of what he looks like or what we're missing in the bottom left-hand corner of your screen. So in a moment, I'm going to hand over to James, and he's going to run today's webinar for us. Before we get there, just a couple of housekeeping things. To start with, there will be an option for you to ask questions, and that will be in your panel, where there's a little option where it says questions, or I think actually the image is a hand. So if you click on that, you can ask questions throughout the presentation, and at the end of the presentation from James, I will ask him any questions that are coming up, and if we don't get the opportunity to go through all of them, then what we will do is give you an email address where you can send any questions that we will get answered for you. So at the moment, I can't see any questions, so that suggests that everybody can hear what we're saying this morning, which is great. At the end of the presentation as well, I will give just a little bit of information about Care First and how we can support you as well. So without further ado, I'll hand you over to James, and then you can take it from there. So good morning, James.
Yeah, good morning, everyone, or good afternoon, as it just about is now. Firstly, apologies that you can't see me. I've had a laptop die on me this morning, and I've had my broadband die on me this morning, which is exactly what you need when you're talking to 100 or so people or more. However, it's probably not necessarily a bad thing not being able to see me, as we are 10 weeks into lockdown. First of all, big thank you to Carl and to Care First for trusting me to drive for the next 20 to 25 minutes. Hopefully this will all work, and hopefully my webcam doesn't turn on halfway through, because it'll catch me unawares as well. So it's been an interesting few months, which is probably the understatement of the year. I've been involved in financial wellbeing and employee engagement for the best part of 25 years, which is pretty depressing in itself. And yet in recent times, I've seen more of the broad spectrum of this topic in just a few months than I have in the last couple of decades. I've now had first-hand experience of furlough, redundancy, and generally trying to reshape what's important, both in life and in what we spend money on, whilst keeping a business productive, people motivated and focused. This also started with a remote induction at the start of lockdown. In fact, I'm now in the office because my broadband crashed at home and I needed a new computer. This is the first time I've been in this office since I started work, so it's been an interesting few weeks. I now work for Wealth Wizards, who created MyEva, who acts as a non-intrusive digital financial coach and advisor to employers and employees up and down the UK. And with around 90% of us saying they've never spoken to an advisor, but over 50% of employees saying they would if they could access or afford it, MyEva's got a lot of work to do at a time where financial worries are bigger and more challenging than ever. Today I want to discuss some of this, but also impart some basic hints and tips on just how you can manage your money better. Just to say, I'm not here to advise, I'm not just here to guide. I'm not here to talk about what you should be doing with your investment portfolios or pensions and that side of things, or which prints you should be investing your money in on the continent. But if you take just a couple of things away today, then I'm going to be happy. All opinions are my own, and I would urge you to seek advice from a qualified advisor if you need it. And if you've got any questions during the session, please feel free to post them as we go along, and I'll come back to them at the end as we need to. That's a small print out of the way. Financial advice isn't just for the wealthy. Forget any images you might have of a suited chap in your house. It looks a little bit like that guy you can see right now on the bottom left of your screen, eating all your biscuits, drinking your tea, and discussing investment strategies. Financial guidance and advice helps us day to day, and it's invaluable if done well. Over 40% of us didn't have any savings pre-lockdown, and only 30% of us had more than 1 month's salary to fall back on. And I suspect that's probably a very different story now, as people have had to use savings to survive. However, what it's meant is many of us had time to understand our spending just that little bit better. But we'll talk about that as we go through. Now, that should mean the slide changes. There you go. So before we start, this is the first test from Carl. I'd like to ask you all a question. I can't see who's answering what, but it's just a gauge, and I can see how many are actually listening. So how would you rate your current financial understanding and situation using 1 to 5 as a guide. Now, Carl, do you need to do something here to bring up the poll?
I do, so I can do that, and I can show how people have answered already before we launch this. Can you see that,
Okay.
James?
I can indeed, yeah, which is encouraging actually. Not because nobody's totally got this, because obviously that would probably mean they know more than me, which would put me on a back foot. But also it's great to see that there are some people doing okay with all of this. I appreciate there are many out there that are struggling, many that have found this, especially now with the COVID situation, particularly difficult, but possibly struggling before that as well. And hopefully today, some of the hints and tips I can impart on you will help pretty much everybody in some shape or form. Great, thanks for that, Carl. So, I've totally got this, is my answer, but obviously I now can't control my screen. There you go. So let's start with the basics. What we need in life. This is, of course, different for everybody, but we all start somewhere. Some of you may well be familiar with Maslow's hierarchy of needs, either from school or maybe from a training session you've been forced to attend at work. Well, this is my version, called My Hierarchy of Funds. Starts to look at where our money goes and how much our money could actually motivate us more with a little bit of planning, and helps employers to understand why finances can actually help to engage staff as well. Each and every month or week, we receive our pay. It comes in and then very quickly, unfortunately, it starts to go out again. You start by paying the essentials, which is another term for boring, I suppose. Your mortgage or rent, your loans, your credit cards, utilities, you start to get the picture, mobile phone, Wi-Fi. And then you have the food to pay for a month. It's a bit harder because you can't go out on payday and stock up for the whole month unless you live on pot noodles or baked beans or similar. So you have to make sure you've got enough to cover throughout the month and actually plan your outgoings. All very basic. But then we have car and transport. Less relevant right now as we can't go anywhere, but it won't be long before we can. So this expense will grow again. Wouldn't recommend going to the beach right now if you can possibly avoid it. And actually not paying for petrol has made us realize just how much it costs us each and every month. Then we hit kids clubs and gym memberships. Again, on hold right now because they're all closed, but you obviously have your kids clubs, you have your kids activities, things that would normally cost you on a regular basis, and maybe 20, 30, 40, even more for gym memberships as well. Then we move on to home entertainment. You've got Amazon Prime, Now TV, Sky, Virgin, BT, Netflix, Disney TV, Xbox, PlayStation. We know just how many of these can be going out, and they don't cost a small amount either. And then we hit the takeaway, cinema, clothing, nights out, holidays, etc., with bigger goals in the distance that go up all the way to the likes of retirement, weddings, house move, family planning, that side of things. So the first question is, why do we go to work each day? What actually motivates us to get out of bed? Is it to pay for broadband or pay for a loan? We know it's to put food on the table because it's such a well-known expression, but do these actually motivate us to go to work? Do you bounce into work on a Monday morning knowing that you're going to be able to pay for your Now TV or pay for your next mortgage payment? I very much doubt it. And actually the next thing is then, what do we want to be spending our money on? That's fairly obvious really. We want to be spending the money on the spend money on what is more important to us. That is the nights out, the clothing, the takeaways, the holidays, thinking about retirement, that sort of thing. But then when does our money actually run out? That's the key. Now some of you might be thinking, can you actually see my bank account right now? It's certainly probably reflecting mine. We've all got more month than money. There's no doubt about that. If you haven't, you're very, very fortunate. And we all run out just as we get to the fun stuff. You know, if we're just hitting Netflix and able to pay for that, but we can't do anything more, it's a bit like watching a movie every single month, but never being able to get to the good bit, never being able to see the last 15, 20 minutes and find out what happens. The things we actually get to enjoy, the things that actually motivate us, are just out of reach, or we have to make sacrifices to actually have them. This isn't motivating, it's just essential. We need to look at the priorities here. It will obviously change from house to house. I know that clothing will probably come lower down the triangle with a pyramid in my particular household, for example. What I can't do is offer you more money. In fact, pay rises for many are unlikely in the short term, while the world itself turns itself the right way up. Right now, many have had a drop in income, but haven't had to pay for a mortgage or a loan or a gym membership or fill up the car and pay for public transport. So we've been able to cope. But these are going to come back soon enough. Mortgage payments will return, loan payments will return. You will be wanting to go back to the gym. The pubs are about to open, as we all hear about so often. So the aim is to get your money to go further while you currently understand what you can actually do without. Habits have been broken recently, habits that you've had in your life potentially for a long time, whether that's meeting mates to go to the pub, or whether it's going out for dinner, or whether it's going shopping, or whatever it might be. These things haven't been able to happen. We found new ways, again, to cope on lower budgets. Working with a financial expert, coach, or guide can not only help you find ways you can save money and budget better, but also remind you to take these actions and set these goals. You can chip away at the pyramid and allow you to do more of what you enjoy. It can ease anxiety and give work more purpose. Finding a positive outcome that means something to you and your family. The idea really is to get your money to last a month and to put some sunshine back into your home at the same time by climbing higher up that pyramid. Go for the things, go for the goals that really mean something to you. It's worth mentioning at this stage as well that you'd probably already be able to save money through your employee benefit platforms. This isn't an advert. I'm not going to talk about anyone in specific, but from kids to gyms, cinema, food, holidays, utility bills, you could be saving a 4-figure sum just by exploring it. And yet over 70% of people on average don't even bother. They don't bother to try and save £1,000 a year because it's time. Right now, all too often, the holidays, the nights out, the big party, or the clothing are funded by credit cards or loans as well. Well, not right now, of course, as we can't go on holiday, we can't have nights out, we can't have a party. What's the point in buying clothes when the garden's better presented than all of us? However, outside of lockdown, these spending habits in turn fatten the amount you pay out to the credit companies, meaning you have even less to spend on the things you love the following month. And as your debt repayments grow and you hit the debt cycle, the reliance on credit cards simply become more and more. Something it's really hard to break out of on your own. So step one is to plan and to set achievable goals. Deciding to put £20 a month aside is not a plan. It's a bit like going to the gym or buying a yoga mat. I know somebody that goes to the gym to drink smoothies in the gym while their child plays in the play area. That's not really getting fit. You need to actually use it. Even reading about finances or listening to me especially isn't going to get you financially fitter. Set yourself a goal and write it down. What you do need to do in the house, where do you want to go on holiday, how important is a nest egg in case of crisis? Again, now, that's hugely important for many, many people. And do we ever want to be able to retire? Well, of course we do. A goal can even be to just simply pay off a loan or credit card sooner than you planned, or not to rely on them ever again. But a goal is a must, very much like getting fitter, wanting to run 5K or last the football match without passing out or breaking a drumstick is the goal that drives you to do the groundwork. But working with a trainer, whether digital or physical, then helps you to actually accomplish them. Once you understand what it might cost, say £1,000 for that holiday, whatever it might be, or £50 a month to get you there in time, you can then look at what you can do without, or where could you make savings. Doing a budget planner to see where you are right now, using today's income and outgoings, that's vital because you've got slightly less income potentially right now, but your outgoings are significantly reduced, and compare it to 3 months ago. So you can see the difference. If you were spending £6 a day on lunch and coffees, if you're in London, it was probably even more than that. Could you make your own for £2.50 a day, even 3 or 4 days a week? That could save you over £800 alone each year. That's nearly a UK break or holiday. Reviewing your utilities could save you another couple £100. Going to the office or place of work, now that remote working's a thing, could save you hundreds of pounds in fuel as well. Review your mortgage, or again, use the benefits at work to reduce your food bill or gym costs. 5% off your food shop of say £500 a month would trim another £300 a year off your outgoings. Whether this is needed to survive right now or to achieve your goals, now is the right time to take this action. As soon as you know you've saved, do something with the money. Overpay a loan, put it into a savings account, hide it in the biscuit tin. It doesn't matter, but don't leave it a month or two thinking you'll get round to it. As you'll then be taking it away from your expenditure again, and you're going to miss it. It's going to be a pain again. To get started, I also recommend that you try the Money Advice Service website. It's not just for those people that are really struggling. It's a fantastic bit of kit. It's probably a 20-minute task, but I guarantee you it's time well spent to go through the budget planner. Not least because writing it down and actually thinking about it increases the chance of you doing something about it by 25% at least. Worth noting too, they also have a comparison tool to add up just how much you might spend on beer each week, lottery, coffee, hair appointments, cigarettes, etc. And it's quite frightening when you look at the total numbers. Don't try to conquer the world overnight either. Baby step goals means we're far more likely to stick at them and achieve them than going hard and fast at the outset. Lifting smaller weights is often far more effective for those starting out than reaching for the big heavy ones. You'll feel defeated and you'll never go back. Then we come on to simple tips in your day-to-day, and apologies if these are teaching some of you to suck eggs, but again, taking one thing from today, I'll be happy. If already covered, we've already covered putting money aside as soon as you get a gain. That's vital. Whether a pay rise, a loan ending, stopping smoking, reducing utility bills, again, I've covered that already. But the next thing we look at is the 2 bank accounts. Amazingly, many people still pay their direct debits out of the same bank account that they get paid into. If you have a direct debit coming out 2 days before the end of the month, whether that's for your mortgage or for a loan or anything else, it's almost impossible to manage. So get paid into one, even if there's 2 of you, both of you get paid into your own, and then both pay into a joint bills account. That way, they're always going to get paid, first of all, the bills will get paid, and more importantly, you know how much money you have left to pay for everything else. Make sure savings are paid from the direct debit account too, to safeguard them. Many banks now offer pots that do similar things that 2 separate bank accounts can achieve, but for goodness sake, keep them apart. Consider that money gone, it's spent. If you can afford to overpay into that account each month as well, just to give you a little bit more of a buffer, this will help build up that buffer for the boiler issue, car tyres, vet bill, without having to dip back into more regular savings that hopefully you'll be able to achieve. Talk about the situation. Sounds simple, but so many clients I visited when I was an actual advisor started by saying they had no credit card debts or loans. After an hour or 2 sometimes, and sometimes they'd even call me on the way home, it transpired they did have debt, but were initially worried about admitting it, sometimes because they hadn't even told their partner. Whether it's £500, £5,000, £50,000, or actually in one particular scenario, £125,000 worth of credit card debt came to light on occasion. You could physically see the relief on their faces once they started to open up. It felt more like a counselling session than it did actually a financial review. So it's good to talk, and not opening up can create massive anxiety in itself. There are often ways to help in these situations, but you can't do it alone. Care First are obviously there as well to help if you need it too, which I know Carl will cover later. Debt is something we all dream of not having, but we all have it in some shape or form. It's about minimalising it and managing it correctly where you can. So don't fear it, find a way to beat it. There is no judgment here, only a way forward. Reducing credit card limits. Again, sounds obvious. Card companies used to kindly increase your credit limit without even asking you. Used to send you a nice little polite letter to say, great news, we're giving you another £5,000 you can go and spend. Trim them down now to remove that temptation, and also limit fraudsters should they ever get hold of your details. They should be emergencies only, if at all. I appreciate sometimes they have to be used by some situations, but they shouldn't be a way of life or a dependency if you can possibly help it. If you have money to clear a card completely from, say, refinancing, then for goodness sake, clear it completely. Don't be tempted to leave a little bit on it and pay it off over the next couple of months, just so you can afford something else. It's not going to happen. The risk is too that if you were to be out and about shopping or browsing the internet with that card with just a little bit on, maybe after a beer, the little voice in your head is going to convince you that just a couple £100 more on the card is only going to cost you a few more pounds each month, so I'll just top it up a bit. It doesn't take many of those sessions before you're back in the same situation that you were in before. Temptation is a dangerous friend to have on your shoulder, so defriend them where you can. Next one is a slightly bizarre one, which is freezing your credit cards. I'm not talking about freezing your credit cards, but I'll come on to that. I watched a documentary years ago about a couple who got themselves into serious debt. After a lot of struggle, they got themselves back on track and had time to really reflect on why they got into that situation in the first place. Again, they realized that temptation was a big part of it. They kept just one of their 6 credit cards. Originally, they had over £60,000 worth of credit limit, and they left just £500 limit on it. They put it in a bowl of water and quite simply froze it in the freezer. If they had ever had a real emergency that they couldn't pay for, such as they had to get out to Spain to see their son at short notice, then they'd be able to defrost it and use it. But it wouldn't ever be there for an impulse purchase. They removed that temptation. So not quite practical necessarily. I mean, you can hide it somewhere, stick it in a loft, stick it in a tin, doesn't matter, but take it out of sight. But the theory is very, very relevant. Breaking the debt cycle. This is absolutely key. Going back to the pyramid, the bigger the outgoings, the harder to manage, and the bigger the risk you may need credit. Putting money away for an emergency will help lose that reliance, even if it's just a few pounds a week, and plan what you need and when you need it so it sits in your goals and not on your credit cards. Typically, people will have taken a loan out for maybe a white good or a telly or a car or a holiday, This increase in outgoings has meant that gradually an overdraft potentially has come into play, and perhaps even a credit card. Eventually, we're going to sit down and you're going to have a look, and you're going to then take out another loan to clear that credit card, to clear that loan, and to clear that overdraft. However, you've still increased your outgoings, and maybe you've left a little bit on one of those credit cards, which again will start to grow. But because your outgoings are still high, you will find yourself potentially going back into that cycle, building credit card up again, building up an overdraft, and then having to redo it all again at some later stage. Payment isn't manageable, and it's just going to continue to grow. So speak to somebody qualified that can look at all of your finances and help show you options. You could then be in a position to make an informed and thought through choice rather than a snap decision. Can you afford it? Does it offer a long-term fix? Could you save each month as well as take the loan? What term can you actually afford? Having slightly longer terms may cost you more in interest, but if you can only afford that, then that's the only option for you potentially. We all want to be debt-free as soon as possible, but you have to live in the meantime or it won't ever go away. So make sure you focus on this and you understand it. We mentioned the budgeting tools before. Again, if you can afford to put something on hold or cut back in the short term, like have a shorter holiday, remove 1, 2, 3 of the 6 entertainment subscriptions that we all seem to be paying on a monthly basis, or make your own lunches and coffees, it could just help you stop the credit cards being used. Baby steps. Once the loan finishes in a year or so, or you get the promotion that you've been gunning for, you can then save more towards that holiday. Take it one step at a time. You may have even given up caffeine altogether by then, or be drinking 2 pints on a Friday rather than 6, which means you can actually start to make that saving part of your regular calendar. Rewarding your behavior every so often as well is important. Little things like a nice bottle of wine, there's a lot of alcohol mentions here, I apologize, or a takeaway. A day out with the kids, for example. Nothing big, and maybe every month or 2 maximum, but something that just says well done to you and the family, and that reminds you what you're doing it all for. It's not going to be forever. And lastly, we then have the younger generation. If your children are lucky enough to get pocket money, try not to let them spend it all each week on V-Bucks or FIFA points. You can tell I've got 2 boys. You can reward them with these every so often, so they're not valued, or so they are valued rather than expected. If they can put money or some of it away each week or month and look at what they would like to save up for in the long term, they can see their money grow and get the satisfaction of buying something they really want a little further down the line, exactly as we've talked about with us. Of course, other family members can get on board with it too come birthdays, and they can top this pot up as we go along. But if you give them, I don't know, say 10, 15, 20 pounds a month, fantastic. Maybe give them a couple of extra quid each week or each month so they can go and get an ice cream, again to protect their main savings. Don't worry, I'm not trying to teach you to parent, and I fall off the V-Buck FIFA point wagon regularly as well. But making them save as early on will help them so much more in the future. There's a lovely quote from the lady called Phyllis Diller, which is, I want my children to have all the things I couldn't afford, and then I want to move in with them, which I think pretty much sums up certainly where I want to be. So the ambition is that this becomes the normal. When you get into a positive habit like exercise, it becomes easier. Taking that first step is the hardest part. You feel better, you sleep better, you then become naturally motivated to keep doing it. The hardest element is getting going, as we know, and the same applies to money. Taking those baby steps towards your goals and being prepared for the next unexpected will see positive results. Those results in time encourage you to stay financially fit, maybe even push you to make bigger plans, but plans you know you can afford without hitting the freezer drawer. So, whether you said that you were struggling at the beginning or that you were doing okay, or there will still be times some of you need a financial version of a personal trainer, someone that helps you plan, set goals, look at your current health and ease that anxiety, as well as help you make your money work for you and not against you. If things are getting on top of you, then Care First are there 24/7 as well. They're there to support you no matter how small the problem may be to begin with. If you go to the doctors for advice, even if you're fit as a fiddle or not, a second opinion and someone to ease your concerns about some specific issue doesn't take long, and finding a way to a healthier you is worth its weight in gold. So remember, it's better to find a prevention here now than to find a cure later on. And please don't ask your friends on Facebook. Sorry if there are any Karens listening. It was the image that my marketing team provided me, but there are plenty of experts out there. They used to be called the man in the pub. Everybody knows everything about money, and they all want to let you know because often it makes them feel better about their own circumstance. However, if you do get financial advice, please make sure it's from someone qualified, or better still, regulated. Then you have peace of mind that it's the best it can be. And if you decide to share, you're spreading good recommendations and helping others, not necessarily spreading bad advice. Something the world could do also do more with right now, probably more than ever. So if your employers are offering you this sort of support, grab it with both hands now. Many, many, many are. While many things we want rather than need have taken a back seat, now is the time to act, because old spending habits have been forced into submission. That, everybody, is everything from me. I thank you for listening. If you'd like to discuss more with me in detail, my details are obviously on this slide. Unqualified bartender, chef, karaoke singer, tortoise trainer, speaker, etc. But hopefully I managed to last the duration of that and you actually heard what I was saying, because after this morning, anything could have happened.